LTC insurance offers coverage that's going to provide you care in all of these settings, okay? So no matter what your needs are, your long-term care policy is going to provide the coverage in all of these equally, okay? Now, as you might expect, long-term care follows a progression, okay? And when I say a progression, meaning that in my experience, and I haven't done this forever, but in 21 years, many of our customers are going to experience the health event is going to build. So it starts as mild, becomes moderate, and then may advance into more extreme needs and circumstances. So if you can go with me on this, a lot of the times, many of our customers are going to receive their care at home in the beginning. Why not? This is where everyone would like to receive their care. You're in your comfortable surroundings. You're there with your spouse, your family, your friends, right? You're in your environment. It's easy to go and take care of, go to church, do the things that you're ordinarily doing. As a matter of fact, right now, 75% of the individuals that are receiving long-term care from insurance are actually getting care provided at home, okay? And that's where you'll receive your care until it doesn't make financial sense or until it's no longer in your best interest to get care at home. And that's when the progression begins. And then from there, normally you will see the advancement into an assisted living facility where you can get 24-hour supervision without having to pay an individual to stay at your home 24 hours a day. Assisted living is going to offer not only 24-hour, but they'll offer food, bathing assistance, medication assistance. So again, as your needs, as someone who is suffering from a health event, as your needs increase, the different facilities are going to just offer you more services. And again, home health care can be affordable, but it's not really affordable if you need 24-hour a day care. So you can see why you would then move into an assisted living facility. And then the next progression of that would be nursing homes. Now, again, nursing homes, that is where you will begin to find that you need more medical and nursing 24-hour care. And that tends to be the shortest segment of care, and it's at the very end. And as you can imagine, as your illness advances and you get into the end of life, the nursing home stays tend to be the shortest segment. And I bring this up because it's important to understand that long-term care has changed significantly, probably from when you were visiting your grandparents, where all of us remember our grandparents being in a nursing home, somewhere that really didn't bring up good feelings and good memories. But in today's reality is a lot different, where we see more than 85% of individuals in assisted living and home health care and the smaller number in the nursing home environment. And we expect that trend to continue over the next 10, 15, 20 years with the advancement of technology that allows us to remain at home when it's in our best interest. A couple of other areas where you can get care provided would be a memory loss unit. So if your health event is cognitive in nature, then you may need even more protections than the average individual, meaning that memory loss units have special in and out procedures. They have special setups and designs that have been proving to be easier for individuals to cope when they are suffering from cognitive or dementia-related issues. So there are specific, and that's one of the areas that's growing the most. I'm sure you can understand that the memory loss units, those are growing. And I imagine if you look in your backyard, you wouldn't have to go 5 miles before you found a brand new memory loss unit near you. And then last, adult daycare. And where adult daycare comes in is if one of your adult children is going to be your primary caregiver and they're still employed, they really have to be thinking about how are they going to help you, but also go out and earn a living to pay for their mortgage and their kids and their retirement. So an adult daycare environment is less expensive for them than home health care, and it allows them to take you to a center where you will be cared for and fed, taken care of during the day, and then they'd pick you up after work. So again, these are all the different places that care can be provided, and long-term care policies are going to provide care in each of those environments. Now, when you use a long-term care policy, there are two different ways that your LTC benefits are triggered, okay? There's going to be a physical limitation test, and there's a cognitive limitation test, all right? So when you meet either one of those criteria and you've met the elimination period, so it's like a deductible, and we'll talk more about that on the next couple of slides, that's when you become eligible for your benefits to start paying out. So when we look at the physical limitations, the physical limitation tests that the company would use to determine your benefit eligibility, there are 6 formalized activities of daily living. And when you are unable to perform 2 of those 6, you're considered eligible for your benefits to start being paid. And here they are on the screen, and I'll just walk through them briefly. When you're unable to control your bladder and bowel movements, you're incontinent, that would be one of the tests to determine eligibility. Can you clothe yourself? So dressing, and we see when in clothing, we see mobility issues being something there. We see joint issues, meaning that if you have bad hips or bad knees or a bad back, it's really a challenge to put on a pair of trousers. You know, the next time you have a sore back, I challenge you to try that. And you'll see what I mean, that you become compromised, and now other issues come in, like, again, are you, due to your joints, are you a mobility or a fall risk when you're getting dressed? Can you actually reach up and get your clothes off the hanger? Can you raise your arms enough to put on a shirt? Those type of things. Those would all be part of what your doctor puts in your record that is then used in the qualification, okay? Toileting. Can you use a toilet and perform personal hygiene? And not only can you use the toilet, can you get on and off safely? Are you able to move yourself into the bathroom and use the toilet? Can you eat and feed yourself? So the act of eating, the act of preparing your meal, the act of cooking your meal, the act of, everything in the kitchen, from a mobility to a joint to a cognitive, are you able to do that? Bathing. This one's huge. Not only are you able to bathe yourself, but what's it take to bathe yourself? Well, we have to get undressed. We have to then enter a bathtub or enter a shower, which are frequently slick. And so there's a lot of peril around the bathing aspect of the activity of daily living. And then finally, being able to transfer yourself from room to room, or transfer yourself getting in and out of bed. The chair, I try not to look at that one too much, because admittedly there have been times that I myself might have had a little bit of trouble getting out of a chair, but you can see what I mean. The way that you qualify for a policy is the inability to perform 2 of these 6. And remember, when you are qualifying for care, the process involves the insurance company getting a claim from you. The insurance company is then going to use your doctor's records. Your doctor will have defined and created a plan of care for you. The plan of care states which of the activities of daily living can you not perform, what's the hazards to you, and then the doctor will identify what type of care should you be receiving. This is all used whenever the insurance company is determining the eligibility of your claim and when they start paying your claim. And then the other, non-physical, is the cognitive. And we know and we see that more and more customers are suffering from cognitive issues like dementia and Alzheimer's every day. So when you can no longer manage your medications due to a cognitive issue, or you can no longer manage your finances, or you are a risk of potentially losing yourself, these would all be other triggers that would make you eligible for the benefits on an LTC policy. Now, long-term care planning is not a one-size-fits-all solution. Okay, there are many features and benefits that you and your advisor will tailor to dial in your plan. One of the first questions that you'll probably look at is, how much LTC benefit will you want the policy to pay you each month? Okay? And by working with your advisor, you're able to create an effective and efficient plan that really dials in that number based on your current financial situation and what you want for yourself. Okay? So when you're defining your plan, you will determine how much per month would I like to receive. The second thing you determine is how long would you like that benefit to be paid to you? So I get a lot of questions that say, Zach, on average, how long will individuals need the plan? As far as averages, we look at about 32 to 33 months for a man and about 37 to 38 months for females. Those numbers can vary greatly depending on what data you're using. Are you dealing with everyone or just people on LTC policies? But the reality is you and your advisor have to determine what benefit period is going to be effective but efficient. Okay? So I think that you're able to generally pick benefit periods from 3 years up to 7 years. And in some instances, the long-term care benefit plans even offer lifetime if you and your advisor found that was appropriate. When you're choosing your LTC benefits, you're also going to have to decide how would you like to receive your LTC benefit. Would you want that to be a reimbursement where you pay for your services and submit your receipts to the insurance company and then you get paid back? Or would you like a cash benefit paid to you at the time of your claim? Reimbursement versus indemnity. Indemnity is synonymous with cash. That's a decision that you will make with your advisor in determining, based on the type of care that you're wanting, which is best. Here's a perfect example of that. How many of you out there right now would like to have one of your family members, an immediate family member, involved in your caregiving? Maybe you have a daughter or son, maybe a spouse that they want to be and you want them to be. Well, a cash indemnity policy comes to you in cash, and it would allow you then the freedom and the control to hire an immediate family caregiver. Most reimbursement policies will not cover a family caregiver. Okay, so again, expressing what you want for yourself to your advisor will help your advisor tailor an original plan that meets your needs. The elimination period is a key feature on these plans, and like all insurance, this is your deductible. And in general, it's 90 days where you would be responsible for paying for your own care for 90 days. And then on the 91st day of your care, your policy would kick in. Elimination periods do vary from policy to policy. So as you're talking with your customer, if you would like your policy to start, for example, on day 1, there are ways to do that, and they could help you tailor that and build it into your policy. Some of our long-term care policies offer a shared benefit for spouses and partners. So that creates an efficiency, if you will, meaning some of you might be familiar with BOGO, that the concept of buy one, get one. And this is where that comes into play, where by paying for 2 spouses on the same policy, there is a pricing efficiency that can really make a difference in how effective and efficient your plan is. When you're looking at long-term care planning, some of the premiums are guaranteed, and all the plans are guaranteed renewable, meaning that they can't cancel your coverage. But on some of your plans, your premiums will be guaranteed. Some of the plans, your premiums aren't guaranteed. So that's an important point to talk with your advisor. What would you like for yourself? Are you okay if your premiums vary a little over time, or is that something that's a non-starter and you just want it to be level? And then finally, exclusions on the policies. There's health underwriting on all of these policies in the beginning. So when you apply for coverage, the insurance company is going to ask you a decent amount about your health and your health experience and what you've been diagnosed with, treated for, and some of the medications you take. And so ultimately, they are approving you up front today. And once you're approved, the benefits can never be taken from you as long as your premiums are paid. Okay, so exclusions to the policy will mean certain things like, is it cover international coverage? Will it pay my daughter to take care of me? And again, these are case by case on the policies that we really want to dial in and make sure we're bringing the most effective coverage to you. Now, there are a few different ways that you and your advisor will approach your actual LTC need analysis to determine how much coverage do you need. But the basis always starts by getting a good idea of what planning in your area costs today and expectations for the future. From there, you determine how much of that exposure can you afford to keep, or how much do you want to keep, and how much would you like to transfer to an insurance policy. Okay, so when you look at the cost of care in your area, you might be surprised that, and you look at the cost of care for home, assisted living, and nursing home, and naturally the nursing home numbers are really big right now, but like we talked about, 75% of the care right now is in home health care, with another 10% in the assisted living. So look at the cost of care in your area, or if you intend to relocate once you retire, make sure you're taking that into consideration. If you're heading east or heading north, check it out, see what that cost of care is going to look like, and then get an expectation of what does the appreciation cost look like over the next 20 years, because we have to make sure that the planning we do today fits the needs we're going to have in the future. Budget is always important too, and this is where you're going to speak to your advisor about determining your individual needs on coverage and creating something that's both effective and efficient. Okay, due to the number of LTC solutions that are available to your CalCoast advisor, they can help you determine, find a solution that's going to fit the budget that you have for your planning. And again, while you're working with your CalCoast advisor, you're going to be determining how much of that LTC bill do I want the insurance to cover? And that's a very, very unique answer for you and your advisor. Some of you may have more assets that you're willing to sacrifice for LTC. Some of you may say, I want all the assets that I've worked and saved, I want those to go benefit my legacy. I want it to benefit my kids and my grandkids. And you may want to buy a policy that's going to cover a larger share. Ultimately, that's what the planning's about, to make sure what can you afford to cover, and then how much do you want to cover. And that's where, you should reach out to Kyle Johnson or your advisor and engage them on a conversation so that you can take a deeper look at your overall picture and really determine what type of long-term care coverage is going to make sense, because none of us want you to have more than you really need. Now, as we near the end of my prepared comments, maybe we can simplify this by talking about the 3 paths to LTC insurance coverage. Now, on the left side of the screen, and for the longest time, and again, I haven't done this forever, but I have been practicing for 21 years. And in the beginning, long-term care planning was a very binary decision. You either did nothing and really went lone wolf on your own, self-funding, or you were forced. The only other option you had was to purchase traditional standalone long-term care coverage. And standalone has served many, many customers well for many decades. Okay, it's a great way to pay a low premium every month to get long-term care benefits that can inflate in the future, and you get state partnership benefits when you use traditional coverage. Okay, so this can be a really great way if you're looking to plan with a small out-of-pocket premium and then get the coverage that you're going to need down the road. Some of the decision points here, you're going to be spreading out your premium payments. You're going to be looking at premium payments to cover, insuring both of your spouses. If you have a business, if you're maybe a C Corp or an S Corp owner or an LLC, there are tax advantages to buying the standalone long-term care as far as deductions. Again, reach out to your CalCoast advisor on that. We're not giving tax advice today. And, when you look at traditional, there's so many positives in the plus column. One of the only downsides is you have to understand that the premiums on that type of strategy could increase over time. We don't know if they will, we don't know if they won't, but it's something that you have to take into consideration. Now, traditional is also the type of plan where if you don't if you don't use it, you don't get your premiums back. Okay, now most of us hope to never use this coverage, right? We're planning for the things that we didn't expect, and we're planning to protect our family, and we're planning to protect our kids and our legacy. So in some instances, the idea of paying for something that if you don't use it, your premiums are simply gone, that's okay. And I get it. For some of you, you may say, I really want to improve my situation, but I don't like the idea of increasing premiums, and I really don't like the idea of if I don't need it, that I forfeit what I paid. If that's the case, you'd like to talk to Kyle, your advisor, about asset-based LTC planning. And remember I said they're with the hybrid plans, they're not only using LTC, but they've manufactured or engineered in a life insurance policy as a way to provide you the second and third leg on the stool. Not only are you getting the long-term care protection, but you're also able to protect yourself from any use it or lose it outcome, and you protect yourself from any future premium guarantees. Okay? So many customers we work with never even knew that this option existed. So they're saying that you mean you can plan for long-term care, make sure everybody's protected, and if I'm fortunate enough to never suffer an LTC event, then my family's going to get all the money I put in back through a death benefit. Well, yeah. And we engineer the plan so that the death benefit is very, very small, and it's just the premium protection, meaning that piece is there specifically to eliminate the monetary risk of you planning and never needing care. And then finally, the life insurance with LTC. Now, life insurance with LTC is a lot like the hybrid, but it's a little different in that it's not going to have inflation protection and a few of those benefit features that might be known to LTC, but it can create a great dual outcome plan. So if you have legacy planning intentions or you'd like to leave a death benefit to your family, but you also might want to use that for long-term care, this provides you a great way, again, to reposition funds that you have today that'll ultimately be legacy intent assets, but allow you to use it for your own long-term care during your lifetime as well. So again, a lot of different options that are available to you. I would encourage you to reach out to Kyle or your CalCoast advisor and find out, based on the planning that they've done with you and where you're at, what they would recommend. So Kyle, I appreciate the opportunity to share today. I hope that the information is valuable and helps people in their decision-making process.
Great. Thanks so much. I really appreciate that, Zach. Yeah. So again, as you guys have all seen, there's a lot of different options, and the space, has gotten pretty crowded with different providers, different options, but it's all just to tailor the end user, right? So, at the end of the day, we rely on our conversations and also our conversations with the experts in the field to help find a plan that's most suitable for you, depending on your needs. So I'll go ahead and kick this off. And Josh, are there any closing comments that you had?
No, we did have a couple questions though that maybe get answered.
Yeah, definitely. So I'll go ahead and let you ask those questions, and then Zach, you go ahead and take it over, okay?
Okay. All right. So the first question was, if someone is 82 years old, is it a good idea to get long-term care insurance and they still live on their own, just as a note?
Yeah, I mean, it certainly can be. Obviously that individual has won in the gene pool lottery, right? So to be 82 and independently living, admittedly, every policy has health underwriting. So you're always going to have to answer some questions. You're going to have an underwriter who is ultimately rendering a decision on will they or will they not insure you. We have solutions that go up to age 85. Okay, so that would definitely, 82 is still within our ranges. and I would, if they're healthy, and we could certainly survey their options and let you know what they look like.
All right, perfect. Thank you. Also, I think you might have already answered this question, but does the insurance cover living at home or staying at home?
Absolutely. 75% of individuals in the United States who are receiving long-term care right now are receiving it in home. And the policies absolutely are tailored to keep you at home as long as you can, because we know that's where you're the happiest, and that's where it's the easiest for you to be around your family, friends, and to continue participating in your life.
All right, and then what's the best way to seek out LTC providers, especially here locally in San Diego?
We work with a partner. My firm works closely with a firm known as Amada. That's AMADA, and they are home healthcare providers, and they're one of the best in the country. And so we work with Amada, but I think that, and that's a value add that we provide to our customers, so that they get care coordination, counseling, and individuals who actually, understand care and then help people get the care in their home. And that's what also your advisor can do. Each of these policies has care coordination on it. So in addition to the financial benefits of owning long-term care insurance, many of us don't know what to do the first time that we engage or encounter an LTC event. So when you have a policy, each of the policies will come with care coordination. And that means you're going to have an individual at the carrier who has done this before, right? They've gone through a claim. They understand what the process looks like. They understand what getting care in the home is going to look like. So those individuals will also be a resource for you that can then put you onto who are some organizations, who are some caregivers that can help in your area to come in and provide the care.
All right, thank you, Zach. Also, we had a question. What is the average cost of assisted living here in San Diego per month?
You're looking at about $6,800 a month in San Diego for assisted living. And I'd be happy, Kyle, to send over a really nice report to you that if anybody that's on the call now would like to see it, it's produced by Genworth Financial, and we can show exactly what San Diego home health care, assisted living, nursing home, and we can also project that cost out 10, 20, 30 years so that you can see what it looks like in the future. Just let me know if that'd be beneficial.
Perfect. Yep. We'll go ahead and do that. We'll include in our hyperlink.
All right,
outstanding.
Great. Also, kind of a this might be a little bit more of a specific question for certain people, but what happens if you buy a couple's policy and then you end up getting divorced?
Well, it happens, and this is a little bit specific, but in general, if the divorce can be a little less acrimonious, then typically this would be something that can continue to be owned by one spouse, and in some instances continue to be claimed on of the respective spouses. In other instances, when it's a little more acrimonious, this would be an asset that would be levied or granted under the the qualified domestic relations order. So one of the spouses would ultimately own the policy, and the owner would ultimately be able to claim, the other spouse would not.
All right, great. And then, so there's a question in regards to resources for low-income elderly who don't have insurance and are approaching the need for LTC assistance? Is there something available?
Well, in those instances, it would, Medicare does not pay for, or pays for very little long-term care services. Once, and again, I'm based in Houston, Texas. So in California, generally what it's going to be is Medicaid. And then you have the means test, right? So there's the asset-based means test, and then there's the income-based means test. And only when you can achieve both of those would you be eligible for any type of government-provided LTC assistance.
Yeah, Zach, if I might step in here for a second, by means test, for those who may or may not be familiar with it, essentially, in order to receive that kind of care through Medicaid, or to qualify for what we call Medi-Cal in California, you essentially need to have a very low amount of assets associated with your name. Additionally, certain care that is provided to you, if you do have a home in your name, likely once you pass and that home is sold, that will go back to repaying the state for those for that care. So that's why that's the reason that long-term care is very important. There are ways to structure it and potentially serve that type of person, but it gets pretty complicated, and you really need to talk to somebody, someone like us, to find out specifically if it might be an option for you and your family.
All right. Well, I think that concludes our question and answer session here. So just want to again thank you to everyone for joining us today, and thank you to Zach and Kyle for all the great information. If you would like to contact our Calcos Financial Services team, the information is up on the screen now, and everyone will also receive a copy of the recording of today's webinar in their email. So you should see that coming through later on today. Thank you so much, everyone, and we will see you next month. We're going to talk about budgeting for the holidays and how to save some money on during, especially during these difficult times. So join us next month. Keep an eye out for that email for our next webinar, and we'll see you then. Thank you, everyone.